What's going on out there, good people? It is your boy Look Around with LMD Trading, coming at you today with another daily trade review. Today we will be reviewing trades from March 23rd, 2022. This month is moving right along and it is waiting for nobody. But today was a red day in the market. I guess every day can't be green. As much as we want them to be, we suffered an ugly day of trading today. Today, I don't think I took any trades that were based off of a pattern. I just was taking trades to be trading. I think I mentioned that in another video. We are trading to make money, not trading to be trading. And I think that I was taking trades to be trading today. Took 5 trades and had 1 flat, 1 small, and 3 red ones. But let's go ahead. Let's get the thumbnail watch list pulled up just to see what we were watching, see what the charts were looking like. If you look, the only thing that had a nice halfway decent chart was Apple. Apple opened and pretty much uptrended, pulled back, tested the VWAP, and kept moving. And later on in the afternoon, it kind of dropped down, and just flatlined. Everything else was all over the place. Everything else was all over the place. And then we had CVX on the watch list. And we actually traded CVX, took 2 trades on it, both of them red trades. We also traded Apple, took a red one on the first trade, and then the second trade we made a little bit of money, and then 1 flat trade on AMD. I guess I could have had TraderView pulled up while I was mentioning that, but this is what I was talking about. Today, March 23rd, we took 5 trades, closed P&L on the day, $48. And this is what we traded. We traded CVX, took a loss. Apple, took a loss. CVX, we took another L. AMD, flat trade. Curious to see how that trade looks on the chart. And then our last trade, a little bit of money. And at that point, it was like, nah, this is not working today. Let's go ahead and shut it down. Let's see what the market will give us tomorrow. So we'll go ahead, get the charts pulled up, take a look, see what we were looking at on these charts, and then we'll go from there. Let's take a look at the SPY real quick. Yeah, that's just ugly. It's an ugly chart. That's something that you don't want no parts of. Too hard to try to find an entry to make some money. Peek at the Q, same thing. We do see that these both finished lower today. And if we look, the only thing on our watch list that finished in the green today was CVX, which we traded, and Apple, which we traded. AMD, small 0.68% change in the market. This one here, we're wanting to see that one come down. We'll take a look at those charts when we have the time to look at it. But we're going to start with CVX, which was our first trade. And we'll actually look at both of the CVXs while we have the chart pulled up. If you haven't already hit that like button, please do so. Please do so. It doesn't cost a thing. And it'll help me out. It will help me out. But first trade that we took on CVX was a call play. We purchased 2 calls, and we got into this trade at 939. 939. Let's see. That right there is not really a good entry for several reasons. My mentor, who doesn't know he's my mentor, will tell you, find reasons to not take the trade. And if the reasons to not take the trade are less than reasons to take the trade, then you can take the trade. Topping tail, decent volume on an open. Next candle, topping tail. Indecision on this one. A little bit of buyers on this one, but look at the volume. No volume on that candle. This one here, and then we get in right there playing calls. So everything to the left of where we entering in is telling us, 1, see the indecision, 2, sellers are not going to let this one go higher. So we got in right here. Based on this chart, this is not a pattern, so I can't even tell you where I would put my stop at, because this is not a pattern that I would trade. And we stopped out 2 minutes later, 9:41, as this thing came back down to VWAP. And we lost $34, which tells me the stop should have been right there, which technically I should have been getting out right there. Gave it extra room on 2 contracts, and we stopped out for more than our usual $25. So that was the first trade out the gates this morning. Ugly, no reason to take the trade. And we paid for that education in the sum of $34. And we're going to go to the third trade that we took with CVX again. And we wanted to get punished some more. We wanted to get punished some more. We went right back to CVX. And we got into CVX right there. Again, if you look to the left, no real reason. Real reasons would be a nice topping tail, or I'm sorry, a nice bottoming tail without this indecision in the top of it. Bottoming tail with no indecision. These top wicks are indecision. So that would be a reason to get in the trade on this pullback. But this candle broke the low of that candle. So that, even though we're getting in as it breaks the previous candle, this one had already broke it. So we got in right there. Stop will be down here. This one here, we did buy 1 contract. We bought 1 call, and we got out of this one 9 minutes later at 9:52. So let's see where 9:52 is. Getting out down there, just about where I said the stop would be at. And we lost $16 on this one. And that's because we only bought 1 contract. Had we bought 2 contracts and took this stop, we would have lost another $32. So again, not a good trade. Not a good trade at all. We could have saved a little bit more money and stopped out when this broke the VWAP. But we took the full stop based on the 1 contract, and we lost $16. So on CVX, we paid $50 for this education. Paid $50 to go over and review these trades on what not to do. But let's go ahead and review the second trade, and then we're going to review the fifth trade, and then we'll review AMD. So second trade of the morning was on Apple, and we bought calls, and I'll give you the reason why. I'm gonna go up here and click the charts. So if you watch my video yesterday showing how I have my charts set up and how I read them, on this side here, this is your longer time frame. This is the 4 hour and the daily, and we see on the 4 hour, this is kind of just trading flat, and you can tell that by the flat 100-day moving average and the candles just chopping around it. On the daily, it is the same way. The 200 is still in an uptrend, but the 20 and the 50 is just chopping around, no real direction. They are kind of curling back up. But then on the shorter time frame, the hourly and the 5 minute, let's go over, let's see how it was looking the previous day. So this is the previous day. This was Tuesday. The hourly, we see the 50 is in an uptrend, and we see the VWAP, and of course the 50 is going to be in an uptrend because it is the same as that there. But the VWAP and the 50 are in uptrends. So shorter time frame, we're looking for this to continue moving higher until it breaks the 50 and until it breaks the VWAP. So we see it's broke it. Now we need to see if it'll hold it, and then that'll be changing the VWAP to a downtrend. And then we still got to get below the 50 to be in a short-term downtrend. But on Apple, long time frame is just kind of flat. Short time frame is still in an uptrend. So we were playing calls, and we got these calls at 9:42. So let's see, 9:42 would have been that candle there. Better entry would have been here. After this has came up and broke VWAP, pulled back, tested it, we can get in right there, put our stop here or down there. So we got in here, and we got out of this one at 9:49 and 31 seconds. So we got out of this as this came back. Boy, oh boy. Boy, oh boy. If we get in right here, we're getting in on a little extended. But our stop still needs to be down here. Our stop still needs to be below the previous candle. We got out of this trade here on 2 contracts for a $8 loss. $8 loss. And had we just took and put our stop and left our stop right here, look at what this trade did. Look at what that trade did. That should have been a green trade. This should have been a green trade. And instead, we took a small loss, and it cost us definitely hitting our target. Because if you look at this candle right here, we needed the move to go 2 lengths of that candle. This thing probably went 3 lengths of that candle. It went from let's call it 169, up to 170.69. That made a dollar move on the two contracts, would have hit our target. So that was our second trade. That was our second trade. And then we'll review the fifth trade, and then we will go back to AMD. So this one here, another call trade, and we got in at 10.10. So we're getting in well extended. Well extended. This little slight, wouldn't even really call that a pullback. Yeah, not a good entry there. Because again, where would you set your stop at if it was, because we want to see a pullback so that we could set the stop. So here, no real good place to put a stop. And we got out of this one 9 minutes later at 10:19. 10:19. So we're getting out on this candle as it is rolling over. And we made $10 on this trade. But guess how many contracts we bought? We bought 5 contracts. We paid $82 a contract, and we sold them for $84 a contract. So we made $2 per contract on 5 contracts, giving us $10. So not a good entry. The exit was good. We saw this rolling back over. And like I said, no place to set a stop. So even though this thing did eventually go higher, there was no place to set a stop in there. So we were getting out as this was rolling over. So that was the one good thing about that trade. We didn't let it roll all the way over onto its back and take us with it. And that was our second, or I'm sorry, yeah, that was our second Apple trade that we took. And then we'll round it out and finish it with AMD. AMD, we played puts. Let's look at the big picture here. So long time frame, it is in a downtrend. Daily still in a downtrend, even though the 200 is in an uptrend. But we see that the 50 and the 20 crossing over. They are crossing over. So this is setting up to go down. But we'll see if it does do just that. And we see that again today, it never broke the 100 or the 50. It just hugged right along the top of it. But on the shorter time frame, the 50 is still in an uptrend. 50 is still in an uptrend on the shorter time frame. And on the 5 minute, VWAP is in a downtrend. VWAP is in a downtrend from Tuesday. So this is Tuesday's chart. It's in a downtrend and the 50 is flat. So this one didn't really give you any sense of direction. It's basically trading flat, and we see it's traded in between. It traded in between the VWAP and the 50. And then we come over to today, Wednesday. It got above the 50, but this was an ugly chart to be trying to trade. But we bought puts on this thing today. And we bought 2 puts at 958. Let's see where 958 is. 958 is right there. Let's pull this back. Getting in on this candle is a little early. I would not have been mad getting in on that candle right there. Even if the trade does not work in our favor, that's a decent entry, because we see that this opened, pushed down, tested VWAP and failed, pushed down, retesting VWAP, get in right there, set your stop right there, and this should push down. But we see right here, this set a double bottom early in the morning. This set a double bottom, low of the day, early in the morning. And we got out of these at 10:06. 10:06. So we're getting out on that contract, or on this candle right here, as it's pulling back up. And this was a flat trade. We purchased the contracts at $121, and we sold them for $121. So got out flat. That was a good thing, because we definitely would have gotten stopped out. Stop right there. We would have gotten stopped out for whatever that stop would have been. And look at what this thing did the rest of the day. That is just crazy. AMD is just, it's fighting. It is fighting. But then look what it did at the close of the day. It set high at noon, right at noon. And then it sold right back off, and it came all the way back down. So it opened right there this morning, made this nice move, and then it sold all the way back off and gave up all of that to finish flat on the day. And this is why I use the average trading range, or what they call average true range. So we see today that this thing only made a 78-cent change. Made a 78-cent change from 9:30 this morning to 4 o'clock. The average trading range, it trades $6.36. That's its range. So if you looked at a daily candle, that's the range of that candle. And let's see what today's candle traded at. This is the daily chart, and I'm going to highlight today's candle. And if you look up here, you probably will not be able to see it, but today it traded $5.35. So from the time that it opened to the time that it closed, it made a $5.34 range. So size of the candle, but the open and close is just this little tiny body. And we see that's, again, like I was saying on one of the charts, that's indecision. Nobody's in control. That's indecision. But if we look at the candle, we can assume that the sellers are in control, because it finished in the lower third of that candle. And we see that the high of the candle was the 50 moving average. The low of the candle was the 20 moving average. And the body finished just below the 200 moving average. So the sellers are still winning the battle inside the ring, but the buyers are, they're trying to put up a good fight. The buyers are trying to put up a good fight, but the sellers are just barely edging. They just barely winning that round. So we see yesterday, sellers barely won that round. Again, they pushed it all the way up to the 50. The buyers did. Sellers came back, pushed it all the way down. They got it below the 200. Today, same thing. Buyers pushed it up to the 50 and the sellers pushed it back down. I'm still biased on this going down. I am still holding two puts that'll expire in April. So I got a little time on them. And I still see this coming back down. If this pushes down, it may hit a little resistance at 110. But I'm seeing this come back down to the $100. Again, if this breaks the 50 and it holds, I'll be getting out of those puts, because then at that point, I think that move is done. But those were our trades today. Again, taking trades to be taking trades as opposed to be taking trades to make money. We take trades to make money, not to just be trading. So we will get back in the market tomorrow and we will be ready to make some money. That is the goal. And I hope y'all enjoyed this review, and we will see you on the next one. Peace.